Hi guys, very good evening all of you. So it is a matter of immense pleasure for me to start a new batch for the students appearing ACCA examination. As you know, our 8th paper F8 is Auditing and Assurance. Today we are going to start with the first chapter, which is nothing but Introduction to Assurance. As all of you know, auditing is one of the primary areas of practice since the beginning of the profession. So after becoming a qualified chartered accountant, after becoming ACCA affiliate, once you complete all your papers, what are you known as? You are known as auditor, right? So maybe you might be in finance, or you might be engaged in management accounting, you might be engaged in taxation, you might be engaged in financial reporting, but basically people call us auditors. Okay, people call us auditors. So we are the generic names. The generic names are auditor and accountant, isn't it? Professional accountant and auditor. So you might feel like, Pavan sir, I'm not interested in auditing. I will become management accountant. I will become, some other person in the company. But my dear friend, I'm telling you, whatever role you are going to play in future, whether you are going to be an entrepreneur or you are going to be employed, whether you are employed in a listed entity, FTSE 100, or whether you are going to be employed in any, small businesses, small and medium scale enterprises, or whatever you are doing, okay, you have to, in your day-to-day life, deal with accountants and auditors for various types of compliances. So today's world, it is very difficult for us to imagine a life without auditors. It is very difficult to imagine a life without auditors. Even if you are employed also, there will be tax deducted, and for filing your income tax returns, you need an auditor, you need a practitioner, you need an accountant. So auditing, I can say that it is, to some extent, not fully, to some extent, it is the lifeblood of profession. So you call it ACCA, you call it chartered accountancy. One of the primary pillars of profession is audit. And to begin with, these are the classes intended to help the students writing ACCA exam in 2022 September, December and 2023. So we are doing the syllabus of 2022-2023. Okay, so with this brief introduction, shall we go into the subject? Today we have one Mr. Nirmal to help with me in this class. One of my students is also here with me. And another thing is examination, exam orientation, examination techniques, do's and don'ts, preparation tips, all these things we'll do at the end of the syllabus. I'm not even giving you the list of the chapters now, because first let us try to understand, the basics of auditing. After that, I'll tell you what is our syllabus, how the examination will be, all these things I'll take you through. Don't worry about it. And as all of you know, I am a chartered accountant. I'm also a cost accountant. I have written ACCA exams and I am qualified to teach auditing. I have been teaching auditing for the last 15 years, both AA and AAA, AAA we call. AA means F8 audit and assurance, and in the advanced level, where you go at the final level, you have advanced auditing and assurance, which includes professional ethics also. So I have been teaching this 2 papers for the last 15 years, and I have written ACCA and qualified this paper as well, because before I teach, I should know the examination pattern. That is the reason, though it is not required, though I am exempted to write this paper, I still wrote this paper just to understand the subject from a student's perspective. Okay, from a lecturer's perspective, I can say that, hey, I am already a chartered accountant. I have written books on auditing also. Why do I need to study? But orientation differs now. So the board, one board, if you are doing ICAEW, Chartered Accountancy from Institute of Chartered Accountants of England and Wales, the orientation will be different from when you are writing ACCA. The same auditing is there in ACPA for CPA guys. That is different in orientation. In Indian Chartered Accountancy, it is different in orientation. So you cannot say that, Pavan, wherever auditing is auditing. No, there is a lot of change in the way we see the subject, and also there is a change in which we write the answers. And also, it is a computer-based examination. So you should have the technical skills also. Chalo, anyway, we are entering into the subject. So introduction to assurance. There are so many things we are going to discuss going further, but I'm not taking you through other things. There are certain things like this. What is an assurance engagement? Then what are the 5 key elements of assurance engagement? All these things we will come back. So basically, first let me tell you what is the necessity of audit. Before going into the details of, there are 2 types of audits: reasonable assurance engagement, limited assurance engagement. There are audits, there are reviews. Arey bhai, before telling all these things, in the name of God, tell me what is the necessity of the discipline. Now I'll tell you a simple logic. Okay, so first we are going to discuss something about external audit. Okay, now imagine, I'll give you 2 examples. Okay, imagine you want to invest money in a PLC, in a publicly listed company, publicly traded company. Like you have $1 million, and you want to invest. Now you opened your Demat account, or ISA you call it, or you are looking at some information over internet. So you have one company, Amazon, you have one company, Tesla, you have one company, British Petroleum, you have another company, Google, Alphabet. So now you are confused. In which company I need to put money? Which company I need to put my money in? So simple, common sense. You don't need to have any great skills to understand it like this. We invest money in a company looking at the financial performance of the company, isn't it? If the financial performance of the company is good, I feel more confidence in putting my money in that particular company. So obviously, you calculated return on investment, you calculated the profitability ratios, and then you understood that Google's return on investment is 20%, whereas Facebook return on investment is 24%. Just for example, okay, this is only hypothetical example, not based on any research data or not based on any actual data. So just I'm taking some random numbers, okay, whatever is coming into my mind. So Google has 20% return on investment and Facebook has 24% return on investment. As a person of ordinary prudence, you tell me which company you are going to invest. Other things being same, there are so many other things you need to consider as well. Management, corporate governance, social responsibility, the business models, the vision, okay, the projections, all these things are there. Keeping all these things neutral, only considering 20% return on investment and 24% return on investment. Don't you think you have to choose the company with 24% return on investment? But the problem comes, my dear friend, how you calculated these ratios, these profitability ratios, efficiency ratios, how you measured the financial performance, looking at the numbers published in the annual reports of company. So you have extracted numbers from the balance sheet of company. Now, who prepared balance sheet? Who prepared this balance sheet? Tell me, who prepared this balance sheet? The management of the company. Now you may say, Pavan, why will I trust? Or rather, how can I trust? One guy is saying that he is doing business. He prepared his balance sheet. He is flaunting of his financial performance and his financial position. Don't you think there can be a potential for human error, or there can be management bias, or who knows, there can be a fraud, dude? I made 100 millions of sales and I have written 125 millions of sales, just to show a bigger picture to the shareholder. Fraud it is. Don't you think these kind of things are common? Even a company like Toshiba, there are so many examples, but just one example came into my mind. What happened in Satyam Computers? What happened in Lehman's case? What happened in Enron? What happened in Enron? Tell me, one of the classic examples. What happened in Kingston Cotton Mills? They're inflating, artificially boosting up their sales. So the sales is 1x. They're showing 1.2x, 2x, 3x, who knows? So there is a chance, right? Isn't it? They'll change the numbers. So again, coming back to the same question, how can I trust the numbers given in the balance sheet, P&L, or other, aspects of other parts of financial statements of a company? I don't trust them because I don't know them. I don't know them. I don't trust them. I have a question. So my degree of confidence, my gut feeling, my trust factor, my belief, my confidence level is lower. I'm not feeling like trusting these numbers. I don't. This is the problem. This is the problem. Now imagine another example I'll give you. I'll give you 3 examples. First example is investment, which is very appropriate for the subject. Second example is generic example, which makes you understand the concept. You want to buy a house. You want to buy a house. So you have logged into Zoopla, you have logged into some of the property dealers websites, you Googled it, and then you realized, say for example, okay, something near Chiswick, London, I have seen one one house with 4 bedrooms. So I want to buy that. Okay, very good. So you called the owner and you said, hey bro, you okay? I want to buy this house. So the owner said, yeah, you're most welcome. We are thinking of selling this house. So you went, you saw the property, everything seems to be very good. And the owner is saying it is 400,000 pounds. You liked the price as well. 400,000 pounds you are okay with. Will you give the money? Will you take the possession of the property in one go? Will you have that confidence level when you are investing that much of money? While buying a house property, if you are buying a house property, you tell me, what are the precautions you take? So we have our friend here. Nirmal, you are there with me?
Yes, sir.
I can't hear you. Nirmal, if you are buying a house property, you tell me, what are the precautions you take?
I will look at all the things like, for example, the land and the closeness to the city and other aspects.
Okay, then what else? See, you are happy with the location. You are happy with the location. You are happy with the proximity. You are happy with the logistics side. But what are the questions that will hit your mind, Nirmal? Is the title to the property of the owner, is it defective? Is he the real owner, or is it artificially crafted paper? What if that is a fake document? What if he is not the real owner? Possible or no?
Yes, sir. Possibility is there.
Maybe in London, the risk is still there. If the risk in some countries is, say for example, this much, the risk in underdeveloped countries can be huge. These real estate frauds are very high. Even in India, I have seen so many real estate frauds. So don't you think you need to approach a professional to get the assurance, to get the confidence level that this guy who is trying to sell the property is the legitimate owner of the property? Don't you think you need to get this assurance from someone?
Yes, sir.
So to whom you go? You'll go to a solicitor. You'll go to a property solicitor. You'll go to a lawyer, isn't it?
Yes, sir.
So you'll give the photocopy of documents to the lawyer. He will do some procedures which you may or you may not understand, but finally he'll say, yes, bro, the guy, Mr. Pavan, who wants to sell this property, he is the legal owner of this property. Yeah. So now your confidence level is more, isn't it? So this is step 1. So step 2, Nirmal, you tell me, the moment you know that Pavan is the legal owner, will you close your eyes and give, money to me to buy the property?
No, sir.
The answer is still no. Imagine it is a property which was built. Do you know, when you look at the houses in Birmingham, the houses in Coventry. Can you believe the houses are built 200 years back? Average house you take, beautiful house from outside, average house you take, it was built 70 years, 80 years back. So 70 years old construction, how do you know how to check it? You don't know. You really do not know. So you need to go to an engineer or a builder or an architect or a person who has expertise in that particular subject. And you need to bring them here. You need to request them to come. And you need to say, hey, bro, this is the house I'm thinking of buying. Could you please check this and tell? So they will check the structural strength of the house. They will check, if there is any problem with plumbing, or if there is any problem with the electricity or the points or any cracks in the wall or any leakages. Everything is everything. Right, from lighting, heating to everything. They'll verify and then they will give you their opinion or their certificate, or they'll tell, boss, you can proceed with this. So this is dwellable. Next 40, 50 years, you'll not have any problem with this structure. So then it gives you confidence. Step 2 ho gaya. So after that, will you buy the property? My dear friend, the answer is no. The answer is no. Then you will go to valuer, third professional. Then you will go to valuer and then you will ask, hey, dear valuer, I have identified a property, legal due diligence is done. I am happy with the title of the seller. Point number 2, I am happy with the structure of the building, but I do not know how much is to be paid. So how much should I pay? Should I pay 100,000 pounds? 200,000 pounds. That guy is asking 400,000 pounds. Whether this house deserves that money or no, I don't know. So can you please help me? Then the valuer will come. He'll see what is the registered land. What is the plinth area of the construction? How many square feet of the property is constructed? What is the quality of the construction? What are the materials used? How many bedrooms are there? So he will verify everything and then he says, bro, it is 380,000 pounds. The value is 380,000 pounds. So they'll calculate the fair value, they'll calculate so many calculations will be there. Cost of construction, they will estimate, based on the inflation, how much would have been the cost when it is constructed? What is the market value? What is the fair value? Today, if I need to build the house, how much I would have to incur? So all these things they'll consider. Replacement value they look at, then realizable value they look at, then fair value they look at, market prices they look at, cost of construction they look at, and then they say 380,000 pounds. Then you negotiate with the seller and then you say, bro, I'm happy in all the ways. Legal due diligence, I'm happy. Operational due diligence, I'm happy. Valuation, I'm happy. But can you please reduce the price to 380? Then he said, no, 390 final price. Okay, you negotiate, you bargain, you strike the deal, and then agreement is done. You bought the property, you have given the price, you will go to the sub-registrar office, you will get the property registered in your name, or you will go to the council and you will complete the formalities, and then housewarming ceremony, you will come with a box of sweets and say, Pavan sir, I got a new house, sir, take the sweets. Oh my God. Don't you think the process, maybe I stretched it for a few minutes so as to enable you to understand the process, but don't you think this is the regular process you have to follow, irrespective of the property, irrespective of the place, wherever you buy a property, in whatever the country, whatever the property is, this is the process. So Nirmal, you agree with the procedure what I told?
Yes, sir.
So my dear friend, if you observe, the whole story is revolving on one phrase: degree of confidence. My dear friend, this is called assurance. So coming back to question number 1, how can I trust the numbers given in Google's balance sheet, Alphabet's balance sheet? Their statement of profit and loss is saying that they earned profit of so and so currency units. How should I trust it? What is my confidence level in it? So you need a lawyer, you need an engineer, you need a doctor who possesses two things. If today Pavan is saying that the financial statements of X Limited are showing true and fair view, why people trust this? Why people trust this statement? Why people trust Pavan? Because of two reasons. One, Pavan has the professional expertise, subject knowledge on the subject matter. So he understands the subject and he is a professional. He's an expert in it. Point number one, he has the knowledge. Two, he is member of a professional body wherein he got license to practice the profession subject to code of conduct and law. So I cannot behave, according to my whims and fancies. I cannot conduct audit. I have to conduct audit in the four walls of framework prepared by International Auditing and Assurance Standards Board, you call it, or International Federation of Accountants, you call it, or ACCA board, you call it, or ICAEW, you call it, or ACPA, you call it. So basically there is a framework determined by a regulatory authority. I have to shut my mouth and follow it. So two things are making you believe Pavan. One, he is a professional with a degree, with a qualification, with a proven track record, with skill. This is one side. Second side, he is controlled by a regulatory body's code of conduct, and he is supposed to, and he is behaving in a regulated manner, which increases the integrity of the person, which increases, the responsibility or accountability of the person. Because of these two reasons, when Pavan says, I have verified the balance sheet of Facebook, I have verified the balance sheet of Alphabet, I have verified the balance sheet of Tesla, I have verified the balance sheet of Tata Motors, and the financial statements are showing true and fair view. So if a professional says that, it increases your confidence. You looked at the property, it did not give that confidence to you. You liked it. Hey, I like this property, but it has not given enough confidence to you. The day you went to the solicitor, property solicitor, the day you went to the valuer, the day you went to an engineer, when they have given their opinion, then like, yes, now I'm getting more confidence. That is the role of auditor in case of financial statements. That's it. This is how you should understand the necessity of audit. So my dear friend, can you read the content on the board, please?
Purpose of an external audit engagement. As per ISA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with international standards on auditing. The purpose is to enhance the degree of confidence of intended users in the financial statements. How is this achieved? By expressing an opinion on whether the financial statements give a true and fair view and are prepared in all material respects in accordance with an applicable financial reporting framework.
From the words what you can see on the board, okay, I can take randomly one word, any one word I can take randomly, and I can speak for 1,000 years on it. 1,000 years, that heavy they are. External, audit, engagement, ISA, overall, independent, auditor, conduct, true and fair view, material aspects, applicable financial reporting framework, industry, so intended users. So these words are heavy words. But at this level, what we need to understand is this first box is there, no? ISA 200. What is ISA? Like, do you remember accounting standard 2? We have inventory valuation, property, plant and equipment. These are the standards. They are for accounting. Similarly, for auditing also, we have standards. ISA stands for International Standard on Auditing. So there is a standard numbered 200. Its title is this big. What is the title of accounting standard 2? Inventory valuation. What is the title of ISA 200? Overall objectives of the independent auditor and conducting of audit in accordance with international standards in auditing. This is the heading, name of the standard. So what it says, the purpose of audit is to enhance the degree of confidence. So ACCA is saying, dear Pavan, yes, sir, you are a soldier from today. Yes, sir. I'm giving you license to practice. Yes, sir. You got your COP. Yes, sir. Starting your practice. Yes, sir. Then ACCA is saying, bro, listen. Your primary purpose is to enhance the confidence level of the intended users of financial statements. Intended users of financial statements. So those who are using the financial statements, their confidence level I have to, increase, enhance. That is the. Now the question is, how can I do that? Simple. Express an opinion on the financial statements. I express an opinion on the financial statements. And this opinion is on two things. Whether financial statements are showing true and fair view. What is true and fair view? We'll discuss in detail. Don't worry. Whether financial statements are showing true and fair view. Whether financial statements are prepared in all material aspects in accordance with applicable financial reporting framework or not. What is applicable financial reporting framework? Simple. Accounting standards, financial reporting standards, IFRS. If you are preparing for, a US company, US GAAP. If you are preparing financial statements of Indian company, Indian GAAP. If you are preparing financial statements of a company in UK, UK GAAP. UK GAAP is different from IFRS. That even I came to know after coming to England. Okay. I know that UK GAAP is different, but then I realized, in practical terms, what is the difference? So this is how you do this. So this is external audit. Okay. Now, what is the objective the auditor should achieve? This is a very simple thing. Okay. So with the background of whatever we have discussed, very easily you can understand these 3-4 points. So Nirmal, can you read this, please?
Objectives of the auditor. Obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error.
Okay.
Express an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework.
Very good.
Report on the financial statements and communicate as required by the ISAs in accordance with the auditor's findings.
Excellent. So before we log off, so first session will be short and sweet and cute and brief session. Okay. Before we log off, I will give you some homework. Now, Nirmal, you guess, just guess, what is the homework I'm going to give? And I'm speaking about the contents of the board. Okay. On the board, whatever you're seeing, from that only I'll give you.
I'm not getting it, sir.
First one, what you need to read today is, in your notes, write down 1, reasonable assurance. There are 3 levels of assurance. One is absolute assurance, which is absolutely not possible. No doctor can tell you after performing a surgery that this is with 100% accuracy. I can tell you so and so. No doctor can tell you before performing surgery or during the surgery or after the surgery. He cannot tell you with absolute assurance. He can tell you 95% confidence level. So he might have done 10,000 surgeries in his life. 10,000 surgeries he might have done in his life. And one minor surgery is coming, minor surgery. Still he cannot tell absolutely, I'm telling you, write it on the stamp paper, I'll do this. He cannot tell. Absolute assurance is impossible. You cannot give absolute assurance on anything in life. So one step below absolute assurance is called reasonable assurance. One step below reasonable assurance is called limited assurance. So your today's homework is write down in your notes one reasonable assurance and limited assurance. You need to read about this. You will open one textbook and read, up to you. You'll open my textbook and read, up to you. Pavan sir, I am referring to Kaplan or BPP. I'll open that book, up to you. Pavan sir, I will ask my grandmother Google. You ask your grandmother Google or you ask anyone, doesn't matter. But I want you to learn what is reasonable assurance and what is limited assurance. In the next class, we'll discuss about this. This is point number one. Point number two. Do you remember frauds and errors you might have studied in your earlier levels? Maybe probably in accounting, errors, rectification of errors, error of principal, error of commission, error of omission, compensating error, frauds, manipulations, misappropriations. All these things you might have studied. So you need to redo these things again. What is fraud and error? I'm sure you know all these things, but once again. Then on the screen, if you look at it, material. Here, one more time, material. So what is this material? Materiality is a concept from accounting. Isn't it? Materiality is an accounting concept. It is not auditing. Many people say, the moment we say materiality, they'll say, sir, this comes in auditing. Sir. No, idiot, materiality comes in accounting first. So, materiality. Then financial statements. Financial statement comprises 5 things: a balance sheet, statement of financial position we call, a P&L, statement of income or income statement we call, or statement of profit and loss. In different countries they call it with the different names, but basically it is income statement. Second one. Third one is a cash flow statement. Fourth one is a statement of changes in equity. Fifth one is notes to accounts and significant accounting policies. So this is financial statements. Then one more thing you need to read, what is ISA, ISA, International Standard Audit. Little bit of background will, will work to increase your enthusiasm and zeal of the subject. You will be more passionate the more you know. So these are the things you need to do your homework today. Okay. So guys, with this session 1 we are ending. After the break, we'll come with session 2. Okay. So if you have any doubts, you can ask me.